Welcome to ForexTV.com. It's Wednesday, November 28th. I'm Remy Huki for New York Forex Market Buzz. In New York afternoon trade as of 1:10 p.m. Eastern Time, Euro dollar is at 147.73. Sterling dollar is at 2.0710, while the U.S. dollar is trading higher against the yen above the 110 mark at 110.14. Earlier today, Fed Reserve Vice President Donald raised speculation that the Fed is leaning towards a rate cut in December. And in today's U.S. data releases, existing home sales fell 1.2% to a seasonally adjusted rate of 1.497 million units in October. Meanwhile, durable goods orders fell 0.4% in October after a revised 1.4% drop in September. Orders are up 0.3% year over year. Joining me now is Brian Dolan, Chief Currency Strategist at Forex.com. Good afternoon, Brian.
Hi, good afternoon, Remy.
Thanks for joining us today.
My pleasure.
Well, in today's session, the U.S. dollar has strengthened against the euro and yen, while the sterling has gained. And not surprisingly, the yen has pulled back against the majors as the market weighs Fed rate cut expectations and also as equities rally. So let's start out with an overview. In this current trading environment where there are recession fears prevailing, what trends should FX traders be keeping an eye on?
There's a number of different elements at work, but I think the most important point for traders to keep in mind is that the market is increasingly of a bipolar nature. The market is either euphoric or it is extremely panic-driven, and given the uncertainty that's out there for the U.S. economic outlook, the housing precipitated by the housing downturn and potential for slower consumer spending. The risks are very high that further bad news comes out of the financial sector and basically upsets the apple cart. At the current moment, we are seeing a return to risk-seeking behavior, and this is most evident in the higher equities, but it's also then led to a rebound in the yen crosses, the carry trade being put back on, and this is the defining feature of the market today. So in terms of looking forward, we're also going to get a very critical beige book report this afternoon. Recall that back in October, it was the beige book release that indicated a deterioration in the Fed staff's outlook for the overall U.S. economy that really sent the dollar reeling lower at that point based on lower interest rate expectations. So the Fed, this beige book actually has the potential to be a bit of a surprise. There's currently a split within the FOMC with regard to over the need to continue easing. It looks like the doves are ultimately going to win out, but this beige book, if it does not provide more concrete evidence, if it indicates that the broader economy is still hanging in there despite the real estate market slowdown, we could be in for a very sharp unwinding of interest rate expectations. However, I'm going to proceed based on the assumption that
you've highlighted the fundamentals and also the psychological aspect, and we do have the beige book coming out this afternoon at 2 p.m. Eastern. But looking ahead into the coming session, what are your expectations for price action for euro dollar and dollar yen?
Certainly, I think dollar yen is on the path toward a potentially sharp recovery. We could see we've got a number of obstacles in the way, but there is potential for it to see back into the 114 to 115 area in the not too distant future. The euro, on the other hand, has given pretty solid indications that a top has formed just below the 150 level. So next week, keep in mind we have both the Bank of England and an ECB rate decision. We expect both rates to be held steady with the potential for a small potential for a rate cut out of the UK. But both post-meeting indications are likely to be more on the dovish side. So in that sense, I think the interest rate outlook is shifting where further euro gains are not justified. and this doesn't even account for the political opposition.
Looking at the action in the majors, let's take a look at sterling as well as the CAD and Swissy against the dollar. Sterling has gained today against both the euro as well as the U.S. currency, and after seeing parity briefly yesterday, dollar CAD is now back around 98.80, and the dollar Swiss downtrend has been reversed this week. So if you could briefly give us your forecast for the major pairs.
Certainly for let me just take one step back and go to the euro. I think the immediate downside for the euro is in play while we're below 148 the figure. In order to see further pullback in the euro, we need to get through the 147 figure to 10 area, and that opens up room down to the primary overall up channel that has been guiding the euro higher, and that lies below at about 145.80, 146 the figure. In the British pound, we need to, if further gains are, in order for further gains to materialize, we would need to clear out above the recent highs around 207.50 to 70 area. That would open up potential for a return back into the low 209 area, and the upside potential for the pound is still there. While we're holding above 205, there's a zone of support down around 205 the figure to 50 area. In the Canadian dollar, we are looking at parity 100 as the key upside resistance, and so far we've spent the last better part of the last 2 weeks trying to get through that, and we're in the process of pulling back from that level now. If the medium-term support comes in around 98.50, and that opens up, should that fail, that opens up potential back to 97 the figure to the 25 area. And in the Aussie dollar, we have...
Last but not least, let's take a look at the crosses of Euro-Yen as well as Aussie-Yen. Euro-Yen has been edging back up near the 163 level, and Aussie-Yen is around 97.40. So going into tomorrow's New York morning session, what price action will we see in the yen crosses?
Certainly, well, it's really going to depend on what happens in the equity markets. If they're positive, the yen crosses are going to be higher. So for the euro-yen, the immediate resistance hurdle is at 163. Actually, there's a bit of a zone, 163 figure to 50, and if we can take that out, then we're looking for a sharper rally up to the 164.5, 165 area. On the downside, we have pretty much hammered out a bottom, and 161.5 support would need to fail in order to indicate a renewed downside focus. Yeah, and also, and I sent you charts, the Aussie yen showing the Ichimoku, the cloud pattern. And what you can see in that chart is that the significance of today's move is that we're testing back into the cloud, which represents the overall trend resistance if it's above the price, and trend support if it's below the price. In this case, the Aussie yen had collapsed through the cloud, indicating a shift to a downtrend. With today's price action, we're testing back into the cloud, and it looks like we're going to get a much more significant potential rise in the Aussie yen longer term. But just looking at the near term road markers, 97.5 is the current the immediate resistance we need to get over, and that opens up then potential for about another big figure up to 98.5 in the very short term.
Okay, Ryan, as always, thank you very much for your insight and analysis.
Thank you, Remy. Have a good day.
You too. That wraps it up for your Forex Market Buzz with Brian Dolan, Chief Currency Strategist at Forex.com. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.